The more the business is, unemployment will be reduced. So again, it is a plus point for whom? For the government. The funds are made available even during period of depression. When you are making real profit, now you are supposed to give dividends to your shareholders. Financial strength and stability of operation, for how long they can actually give you. What I feel is they are the best source of finance because you don't need to pay them back. That is for the equity shareholder. Hello everybody, a warm welcome to one and all. I'm Vidhyaashram from the Department of Business Studies in Vidhyaashram PU College, the Temple of Excellence. In this chapter, Source of Business Finance, this is the last session, and any doubts, any questions regarding this chapter, please comment us, and then we will actually tell all the answers which is possible. Now in this session, we're going to learn about the financial institutions. So you should know that which are the financial institution, why a financial institution is very much needed for a business, and how the business entrepreneurs will approach the financial institution to get the fund for their business. The first one here is the government has established. You need to understand that, right? The government has established a number of financial institutions. Now, why will any government establish financial institution? The reason is, even the government want business entrepreneurs to start the business. The more the business is, unemployment will be reduced. So again, it is a plus point for whom? For the government. Next is infrastructure will be more, right? And the country will be a developed nation. That's why it is a duty of the government to look in the field of capital market as well as social market. Now you people know that there are three types of market. Totally we have kind of a things, that is economic, capitalistic and mixed economy. So these are the economy which India goes with. That is, India is right now in a mixed economy where government should also contribute, plus the private people should also contribute. So here what happens is, the government has established a number of financial institutions all over the country to provide finance. To provide what? Finance to business organization. And it can be actually by a central government as well as state government. So please understand, whenever the central government wants to promote any financial institution, it is for the entire India or entire country. But when it comes to the state level, what happens is, within the states there are so many business entrepreneurs, business organizations which need funding for their initial stage or for their long term. So the state level as well as the central level, they actually have a binding, and they go with funding or financing the business organization whenever the business organization needs that. That's why, students, why money is called as the backbone of a business, because once the money is wasted, to get it back, you really need to have a proper drill. That's why you should always go with optimum utilization of your funds. So we have the merits of financial institutions. So please understand these things. The first one is, financial institutions provide long-term finance. So what is it? Long-term finance, which are not provided by commercial banks. Now, commercial bank provide what type of fund? That is a short-term fund. Besides providing funds, many of these institutions provide financial, managerial and technical advisors. See, this is what the beauty of financial institution which is done by the government, that is central government as well as the state government, that is, they are providing them technical advices, consultancy to the business firm. Next is here, obtaining loan from financial institutions increases the goodwill of the borrowed company in the capital market. That means the more you are actually going and getting loan from financial institution, that means you have a proper liquidity is what the borrower people will actually feel, because the financial institution will not give you money if your company is not a very big company, right? So that is what the thing is. Has a repayment of loan can be made in easy installments. Even see, you have the options, that is, you have taken a loan and even you can go with the easy small installment. It does not prove to be much. It does not prove to be much of a burden on the business. So it's not a burden for you. You people can actually take the advantage of the financial institution and you can borrow the money and you can go with any of the development plans which you people have for the next year, because it is for a long term. The funds are made available even during period of depression. So when the entire country is in a depression, but still financial institution will actually give you, when other sources of finance are not available, you can actually rely upon financial institution for your easy funding. And here what happens is, you have a quality called as easy installment you can actually pay. So it will not be a burden for your business as well as for you. And the more and more the people who are in the borrowing one, that is goodwill of the borrowing, here what happens is, the company in the capital market, you will have a recognition. Consequently, such a company can raise fund easily from other source as well. So when financial institution only have given you the money, you can actually take more loan from other institutions as well, because that is what the guarantee the other institution will feel, that is, financial institution only have given it, so even let us give the funding for these business and the organization firm. So what are the limitations of financial institutions? See, everywhere, whenever you have any merit, you will definitely have something called demerit. The first one is, financial institutions follow rigid criteria. See, it is actually done by the government. So the government rules and regulations, you people know what exactly it is. It is not flexible the way the private people actually go for it. It is all very rigid. For grant of loan, that's why, see, it is very rigid to grant the loan. So once if you get a loan from financial institution, that means the merit is what? Other people will also give you the loan. Too many formalities make the procedure time consuming and expensive. See, this is what it is. It's all about the government, isn't it? So it is the time and the books, the value, whatever they actually do it takes a lot of time. Next, here is certain restrictions, such as restriction on dividend payment. Now what happens is, you have taken loan from financial institution. Now that means the government is only giving you the financial assistance. When it comes to your dividend policy, what happens is, now there is a restrictions on your dividend policy. Supposingly, you have taken financial help from the financial institution, say crores of rupees you have taken. Now you are supposed to pay them in equal installments, or in the way the installments you have dealing with the financial institution managers. Now what happens is, when you are making real profit, now you are supposed to give dividends to your shareholders. But what the financial institution says is, first you settle our amount and then you are supposed to settle the other people amount. Now what happens is, the dividend policy what you have taken, say example, you would have given 3% or 4%. Now the financial institution will restrict you and they'll tell you to actually pay less dividend to the shareholders and you are supposed to pay us more. So that is where the limitations will actually arise. That is, certain restrictions such as restrictions on dividend payment are imposed on the power of borrowing company by the financial institution. Financial institution may have their nominees on the board of directors of the borrowing company, thereby restricting the powers of the company. Once you take money from financial institution, now they are the people who will actually find out and they will nominate one of their person in the company's board of directors. Now what happens is, though the company is yours, you started it with your friends, now you wanted to list it to a private company, to a public company. Now you have taken the money from the financial institution. Now the financial institution will implant or nominate their person in your board of directors. Now what happens is, there is a problem in the power. So this is why, please understand, whenever you borrow, it's easy to borrow, right? But to pay them back, there are so many restrictions, so many clauses. So be very, very careful with that. Next one, we'll go with international, that is international financing. Now, what happens in international financing? Whenever you do any of the business outside the country, now international financing will help you people. Now, whatever we have observed there, with the opening up of an economy, that is, we went with LPG, liberalization, privatization, and globalization. Now, what happened is opening up an economy and the operations of the business organization becoming global. Indian companies have an access to funds in global capital market. So we have something called the global capital market. So we need to actually go and we need to take it. So we'll check what are the things. First one, factors affecting the choice of source of business. Please understand, these are the factors which always are the good choice or the bad choice. You will get to know. First one is financial needs of business are of different types. That is, one is long term, then you have short term, you have fixed and fluctuating. Now there are something called fixed and fluctuating. Therefore, business firm resort to business types of sources of raising fund. So let's check what are the things which we are supposed to know. Now the first one is the factors. The first one is it's because of the cost, how much it will cost if you actually go with that kind of source of fund. Second is financial strength and stability of operation, for how long they can actually give you. Third is form of organization and legal status. The fourth one is purpose and time period. See, time period is very, very important whenever you go with factors affecting the choice of. If you have for a long term, people usually go with the time period. If it is for short term, they only go with the purpose, that is whether it is for a long term or a short term. Risk profile. Now, which finance has more risk? Now, example, I told you about the financial institution. Now, easy installments, you can actually go with it. Borrowed, whatever you have borrowed, now you can go with an easy installment. But what is the risk profile? The risk profile for that is they will select one of the nominee from their department and they'll introduce that person in the board of directors. So the risk profile is more, right? So these are the criteria which we see while choosing the source of business finance. Next is control. I told you financial institution, there is a lot of control here. Now you went with commercial papers, you went with commercial bank, you went with so many other kind of issue of shares, all those things. So effect on credit worthiness. Now which will give you more credit worthiness? Then flexibility and easy and tax benefit. There are few of the source of fund where you go for those source of fund, taxes benefit will be there. That means you will be levied by taxes because you're already paying the interest amount to those source of fund. So these are the factors which really helps a business to find out which is the best source of business finance. But let me tell you here, issuing of share, that is equity share, preference share, debentures, what I feel is they are the best source of finance because you don't need to pay them back. That is for the equity shareholder. And retained earning, which we have also studied, that is, it is confirmed and it is like continuously, it is one of the source of finance which is there for from years to years. That means whatever you do, right, the amount of profit what you have earned, if you are retaining it for the next year, it is actually a best source of finance, isn't it? And issuing equity shares to the public, what happens is only when you are making profit, you are liable to pay them the dividend. If you are not, then what happens is if it is a loss, you don't need to pay them because they are the owners of the company. So even issuing of shares is also a very good source of finance. When you compare retained earning, then you have for short term also you have, as well as you have long term also. You have few of the sources of finance which are fixed and few of the sources of finance which are fluctuating. So please understand all the things, watch these sessions, watch the chapter sessions again and again. If you have any doubt, I'll tell you students, be very free and call us, message us. We are always there to help you. This chapter is all done and thank you so much. I'll see you when I see you.